Interest rates are a super hot topic right now, and if you are in the market to buy a home right now, this is something on the top of your mind. You may already know, but interest rates are very high right now, especially compared to where they have been here in recent years. In this video, we're going to be talking about interest rates, how they affect your monthly payment, and more specifically, one of the biggest ways to influence your home affordability right now. Hey guys, my name is Kyle O'Leary and I'm one of the owners here at View Homes. And I hope you're ready for a video jam-packed full of practical info. So, interest is up, but realistically, it is not insanely high compared to interest rates we have seen over the past couple decades. You can see that we got over 17% back in January of 1982. And right now, we're kind of hovering around that range between 6 and 7%. But let's be realistic here. This doesn't mean it's not having a massive impact on the ability for people to buy homes, because the average home price is more expensive than ever. So when you combine the interest rates people are seeing with the higher than ever purchase prices, many people are struggling to afford homes right now. But I do have some good news for you. The market right now is forcing sellers, home builders, lenders to accommodate for this reality and to offer creative ways to help you with affordability. And the biggest way to do this is actually related to interest rates. More specifically, it's called buying down your interest rate. So I want to help you understand what is an interest rate buy down and how much of an impact it could actually have on your monthly payment. First, how much can interest really affect you? So we're gonna be taking a $400,000 home loan, which is right there about the median sales price here in the United States. And if you combine that with a 7% interest rate, which isn't that uncommon right now, you're gonna be paying close or around to $28,000 a year. Now, nerdy disclaimer here real quick. With amortization, this will change over time. Now, we're gonna save that for another video, and let's be honest, it's not gonna affect a lot of us because the majority of homeowners end up selling their home within about 5 to 8 years. Or at the least, refinance. So, 28 grand in interest every year, which is about $2,300 a month. So we're gonna take a look at it. What if we can get your interest rate down just 1%, from 7% to 6%? That doesn't sound like a lot, just 1%, but what this is going to do, it's going to lower that interest rate payment over the year by 4 grand, which is right there, a little over $300 a month. So how much of a down payment or price reduction on your home would it take to be comparable to something like this 1% interest rate drop? Now, these are just rough numbers, but it's going to take roughly $60,000 in price reduction to be comparable to that 1% interest rate drop. So realistically, this is why interest rates are being talked about so heavily. Typically, it is cheaper to buy your rate down to reduce your monthly payment than it is to just increase your down payment. So now that you understand the why, let's talk about the what and the how. First, the what. What are your options when it comes to interest rate buy downs? Assuming that we're looking at 30-year fixed rate mortgages, there are 2 common ways to buy your interest rate down. This is literally where you pay a fee to drop your interest rate over the life of the loan. This could be small percentages. We could be looking at maybe 1/8% or maybe 1/4%. Or maybe, let's go a little bit larger, maybe 1 or 2%. The more you reduce the rate, the more expensive it gets. The cost is directly related to things like loan amount, your down payment amount, your credit score, and other factors. So there's not a one-size-fits-all answer on how much it really is going to cost. But there is a point of diminishing returns. The amount you're spending really isn't worth the reduction in interest rate. This is why it's so important to have a phenomenal lender who can talk you through all the different options and all the different numbers when it comes to these interest rates. Now, option 2 on common ways to reduce interest rates: temporary buy downs. Now, you may have heard the term maybe 2-to-1 buy down or maybe 3-to-1 interest rate buy downs. What does that mean? This is where you buy down the interest rate on a substantial amount, but on a short term. So a 2-1 buy down works like this. The first year, you're gonna buy down the interest rate by 2%, the second year by 1%, and then the third year, it's back to your standard rate. There are a few reasons why this one could be a good option. It reduces your monthly payment in the beginning. That way it gives you ability to increase your monthly income. It gives you extra money in your pocket in the beginning. So it gives you the ability to maybe do things like furnishing your home or maybe pay for landscaping. It gives you the ability to start with a lower rate, but in the back of your mind, you're gonna realize, hey, I'm gonna have the ability to refinance at a later date once my interest rate goes back up. Now, just a quick note on this. Nobody knows the future, obviously. No one knows what interest rates really are gonna do. So I would advise against your total financial strategy on betting on these interest rates coming down at a later date. It's kind of gambling on future outcomes that realistically, no one knows. It's also important to note, if you do a temporary buy down, you still have to qualify for the loan at the full interest rate. Now that is the what. Let's talk about the how. How do do you buy your rate down? Thankfully, this is pretty simple. You do this through your loan officer or your mortgage broker that are helping you finance your home. They're gonna be able to run the numbers on the options we discussed above and help you discuss what is the best course of action. And when you decide which option you wanna go with, all you do is pay that flat fee. Now, the cool thing is this. Anyone that's involved in your transaction could help pay for this with some limitations on amounts. Your builder could help buy down your rate. We're actually doing a lot of major buy downs like crazy. Now, I'll give you a little side note what we are personally doing as a builder. We're doing a 3-2-1 buy down, which is a 3% buy down on your first year, 2% buy down on your second year, and a 1% buy down on your third year. This literally could save you tens of thousands of dollars on your monthly payments. Plus, we're giving you a $2,000 credit when you go to refinance your home within the next 24 months through View Mortgage. This is fantastic news if interest rates were to drop within the next 2 years after buying your home. And let's be realistic, this $2,000 we're giving you guys is going to cover more than half of what it costs to refinance your home. So back to the point, builders can help buy down your rates, lenders can help buy down your rates, the seller can help buy down your rates, your real estate agent can buy down your rate, or obviously you could buy down your rate. So if you're in the process of considering home buying, please talk to your loan officer and your agent about interest rate buy downs. It could save you more money to spend that few extra dollars to buy down your rate instead of making a bigger down payment or purchase price reduction. It could also be in your favor, a seller contributing to a buy down instead of reducing the purchase price of your home. So I know that was a ton of info. If it leaves you with any other questions, please leave them in the comments. We would love to help. And check down in the links in our bio for sources to some of the info we shared and other helpful tips. Thank you guys so much, and we'll see you next time. Hey guys, if you liked this video, maybe check out this one or this one.